The latest move lower coming after President Trump said this morning that Apple must pay tariffs of at least 25% on iPhones made outside the United States. And in comments this afternoon, he said rival Samsung could face similar levies. But can Apple realistically bring manufacturing back to the U.S. here? And what does it mean for investors if it can't? Tim, what do you say?
Well, I think investors aren't really even focused on this issue, and they have to be. But we thought we were at least away from it. And again, I say that because I think investors are more focused on the week that was also Johnny Ive, the week that was, effectively we just learned about at least a ruling on the services business that may affect App Store dynamics. The fact that we've been worried about gross margins, that we've been worried about the overall iPhone kind of unit demand, and that's something that I think is really overall then dropped inside of the AI story that most people feel like isn't really going Apple's way. So throw on the tariffs, and I get why the stock's under pressure. I think the dynamic here is one where we really don't know where this is going to end up, but I agree. It's going to be very difficult for Apple to suddenly change where their manufacturing is, even though they just told us they're going to be 50% India at some point very soon. And that's something that I still think is hard to believe. But again, the core for me was not the headlines today from Apple. It's what we had before we got here today.
Well, I believe Apple deserves some credit for trying to be nimble in terms of moving manufacturing away from China, kind of, strategically maneuvering with regards to its supply chain, making sure that that goods were headed for the U.S. were produced out of India, and just finding a way to at least on the surface, seeming like they were making efforts to comply with the new regulatory framework. And I think today was a bit of a shot across the bow, but I don't know how serious to really take the threat. It's almost as if the tariff thing has been kicked up again. 25% seems to be somewhat of an arbitrary number. Like, how realistic is it for them to be expected to kind of completely uproot supply chains and then move them here? Like, what are the cost implications? And for me, my real question is, are they really trying to circumvent the 25% tariff? Or is there a situation where the tariffs actually get raised to a higher level because they say, listen, it's actually more cost effective for us to just go on ahead and pay this tariff and keep our manufacturing where it is? And I don't think 25% is sufficient enough for them to even explore looking at manufacturing alternatives. So for me, it just seems like it's somewhat of a way of a governmental land grab. And to me, that somewhat flies into the face of the spending bill, the tax cut bill that we're seeing pass through the House. So for me, I really don't know what to make of it, because on one hand, it's like we're preaching fiscal discipline. On the other hand, we're looking at $3.8 trillion, and we're looking at this tariff number that seems to just be a drop in the bucket. And I really can't make heads or tails of it. For now, I really think the downtrend in Apple is just continued erosion of their underperformance on the AI front, and also some opaqueness around the whole Google situation.